for the kind introduction. Good afternoon, everyone. Thank you for joining us here at the Abu Dhabi Finance Week. As Sarah mentioned, my name is Nadine Hani. I present the business news on Al Arabiya News Network, and it is such a pleasure to be here with you today as moderator for this session entitled Course Correction: 5 Things that are wrong with wealth management and how to fix them. Over the next 20 minutes, we are going to debate strategies for transforming wealth management with our panel of experts. We are going to explore themes like the role of technology in driving innovation across the wealth ecosystem and how to find better ways to give and take financial advice when it comes to wealth management. To discuss these themes, it is our pleasure to have our panelists. Let me just tell you a little bit about each. Mr. Hani Qoblawi is head of International Bank of New York Mellon. Hani is based in London. He's a member of BNY Mellon's executive committee and serves on its European, UK, and Saudi entity boards. Also with us is Mr. Roger Rouhana, CEO of Alfea, a wealth technology venture focused on powering and growing wealth enterprise franchises with an emphasis on the MENA region. And Dr. Mazen Najjar, a senior partner at McKinsey based in the Middle East. He advises and serves leaders in the financial services and institutional investor sectors with expertise in corporate strategy and risk and regulations. Gentlemen, thank you for being here with us. Let's go directly into the topic. Hani, you oversee a global market infrastructure platform. You must hear and see a lot from your clients. We're talking about 5 things that are wrong with wealth management. What are they?
Well, thank you for having me. Maybe I start with the big one, and I think a few others will roll off of it. The most significant one, I think, is underinvestment in technology. It's interesting because we all have experienced for a long time now a highly digital, highly convenient retail platform on your phone, on an app. Sometimes it integrates third-party capabilities. And that's exactly what wealth needs and wealth had not invested in. It's a very fragmented landscape, so admittedly, it's much harder to actually achieve that type of a convenient outcome, but it doesn't mean that people shouldn't be trying. And I think that you'll hear from my fellow panelists that there's a lot of attempts at solving exactly that problem. Now, by the way, that problem also leads to some other problems downstream. For example, relationship managers who are supposed to be spending a lot of their time actually in a commercial capacity because of the fragmentation of the reporting structures, the clearing and settlement and custody structures within the wealth space and the model portfolios within the wealth space, they end up spending way too much of their time actually trying to bring things together to report to their clients and be able to deliver a layer of convenience that isn't otherwise tendered to by the technology. And then that drives downstream implications in terms of the ability of that industry to attract new, fresh talent that can actually make it better for clients at the end of the day. So there's really a number of issues that are all interlinked. Really core to them is underinvestment in technology.
Basically, when you were describing it, I used to be in the private banking business 20 years ago, and it's basically exactly still the same thing today, the way it's done. It's very similar to the way it used to be before. Mazen, let me ask you about what's going on. So basically, if you are talking about trends in the wealth management industry, what would you describe as the major trends that you are seeing there?
Yeah, so I'll probably just list 3 or 4, I would say, key trends. I mean, they say follow the money, and if you want to follow the money, you have to follow the people. So I guess the first trend is primarily demographics and how that is shifting. You see a few dynamics that we're observing now. There is a generational passage of wealth, primarily from baby boomers to the next generation. That has been happening for, the past few years, but we're going to see this accentuate as naturally times goes by. You do see some new entrants in the segments of wealth. And I heard today across the conference we talk a lot about kind of democratization. The reality, this is not only the passage of wealth, but the creation of wealth in new segments. There is definitely more participation from women in the wealth segment across the globe. You take the US, for example, I think around like 30% of financial assets in the US are today under the control, so to speak, of women. And this is, something new, and this is a new segment. So one is a lot of changes on demographics, and we do see that also in our region. So generationally, we expect around $1 trillion to transfer from the previous generation to the new generation. With that come decisions on, whether you stay with the same advisor. Chances are people don't. Expectations change. The second trend is, customer expectations, in fact. This has been definitely one of the biggest trends. And customers, and maybe we'll get to speak a bit about this more, expect more personalization. They are much more open to receive their services in a digitized way. And they do expect things to be more transparent. And so, this is probably two. And three, obviously, is the big one, is technology. And technology is, disrupting the world of wealth, be it in terms of cloud or AI or data, and all of that. I think you see this even with new players entering, like fintechs and so forth.
Let me pick up on the idea of technology to ask Roger. The wealth management industry hasn't been as disrupted up to now by technology as other sectors, as we've heard Hani and Mazen mention. As the CEO of a company that is focused on addressing these problems, what sort of innovations do you think can play a transformative role when it comes to wealth management?
Yeah, so let me talk about three of them. The first one is very sort of front end, and the other two are infrastructure related, but they're as transformative. So let's start with the first one, which is really the gorilla in the room, what's on everyone's mind, AI, and in particular, the rise of large language models. If you think about the moments of truth in wealth, from the moment you're prospected to the moment you're onboarded, the moment you make a financial plan, the moment you build a portfolio and you're recommended that portfolio, the moment it's executed and rebalanced, and then everything that comes afterwards and sort of like being current with current events, reacting to the news, all of those moments are going to be automated by AI. And you'll sort of live in two worlds when it comes to the experience of wealth. You'll have a first world for the people who prefer it, which is fully automated, where you deal with a complement of chatbots, avatars that talk to you and that look like something that's adapted to you. And then for the other people, those who prefer to deal with still RMs and advisors, they will continue to do that, but the RMs will be turbocharged by copilots that tell them what to talk about with you, what fits you, et cetera, et cetera. So that's the first one. The second one is the shift from monolithic to composable architecture, where really the onus on the tech is focused on interoperability and harnessing data. And really, one of the examples of how that manifests itself from an end user perspective, and that's something that we're doing at Alfea, is you can adapt the experience that the user goes through depending on that persona. So depending on your level of wealth, your level of sophistication, your history with the bank, you will be able to see a different screen, different information, go through a different workflow. And then the third piece that I talk about is cloud. It seems like sort of like old news, but most of the industry in wealth is still run on-prem. And in a nutshell, what cloud will enable, it's the classics, right? It's analytical power, and it's much faster cycles of innovation. And so as a user, whether you're an RM or whether you're an end investor, you'll just see much more innovation sort of like hitting you. And new tools will be brought to you on a much, much faster cadence.
Mazen, central to all of that is customer needs. You spoke about changing demographics. Roger just outlined what technology can do. How do you see the changing customer needs as we go forward?
Yeah, that's fundamentally the objective remains the same. From the early days where kind of wealth started being part of what we seek for ourselves for the next generation. So you want to protect your wealth, and you want to know that it's in a stable place. That is always there. you know, and despite the disruptions, this remains the objective.
And you need the security. And when we talk about technology, also there's always that security and data privacy element.
Absolutely. And I think that to your point, you know, when I talk about safety, I talk about kind of, you know, holistic safety. So, you know, and these have been always the themes that govern, if you'd like, the different periods in history. However, what has been changing now, and I think the three of us have touched a bit on this, I'll just dwell a minute on, is one, so if you run any type of survey every year, you see that the propensity for people to accept the usage of digital only has increased, even in big decisions such as basically managing your wealth. And I think we've passed the tipping point, at least in some of the surveys we've done recently, where it varies across region, but we are passing the 50%. So 50% or more of people are now much more open to saying, we just want to deal with it digitally. The second thing is, I think Roger touched on this, is people expect to be treated like persons. We might be surrounded by machines, but we still want to feel like individuals. And with it comes the challenge on the technology side, but also comes the challenge on how can you remain human in your interactions? How can you complement technology with that touch of humanity? And the third thing is transparency. There is an increased level of, you know, I want to understand, what are you charging me in terms of fees? What is the value that you're generating in terms of fees for me? And so that's kind of probably, if you'd like, a number three. For me, this is how kind of, in general, customers or investors are expecting things to be.
Roger, a basic also problem when we think of wealth management is access to the right products. You have institutions that give you access, the other one doesn't, depending also on the RM and his skills and his talent. So how can innovation and technology also solve the problem of access?
Yeah, so there's two components to your question, I'd say. There's one which is, in most situations, I have to go through an RM to access a product or to do a lot of tasks. There's a second, which is I don't have access to the product. The product is not on the shelf. So for the first one, look, it is reassuring in many ways to have to go through an RM. It brings trust. There's a human touch, etc. But for those who don't, but it also exposes you to the specific worldview of the RM, his or her knowledge, right? And so it's sort of like buckets you. And so what we're doing and what we're seeing on the market, and it is going to come across, is either to go through sort of like an AI, right, where the approach is much more analytical, or to support the RM in providing you advice, right? So that's number one. When it comes to access to products, most banks want to give access to a variety of products, whether across geographies, asset classes, etc. The problem is the plumbing underneath is extremely complex, and integration is complicated. And so what we do is we are partnering with a lot of players in the back end to bring a unified experience and a variety of products to our clients so that they can serve it to theirs.
Hania, you have worked or covered the MENA region for a very long time. Let's talk a little bit about the regional dimension of wealth. Are there any specific solutions needed for this part of the world when we talk about the MENA region?
There is. I think there's a trend that I will mention first, building on Mazen's trends earlier, that I think is worth watching very closely. And that is that, by the way, wealth assets have grown year after year for many years until last year. 2022, wealth assets have declined. We know the backstory to that, but not in the region. So in the region, wealth assets domiciled within the region have actually grown and are expected to continue to grow over the next few years. And that's according to studies done by our friends at McKinsey and others. But 70% of those assets, of wealth assets in the region, are still invested overseas. Now, that compares to only 25% for other regions. So the global average of wealth assets invested overseas is 25%, it's 70% here, and locally domiciled wealth assets are growing. So the trends are very encouraging for anyone who wants to be in the wealth business or has established credibility in the wealth business. But there are a few things that they need to do to be able to capture it. Roger has mentioned a few of these. You have to have product on the shelf, or you have to have access to products. Open architecture is a very good thing, but the more you open your architecture, the more you hit brick walls from the perspective of fragmentation and the difficulty that hopefully technology helps solve from the perspective of consolidation. So you open up your architecture, you need an architecture layer, you need an infrastructure that supports it, and then you need access to products and services, and then you need the reporting layers that sit on top of it, and you need model portfolios that sit on top of it, and you need RMs that know how to use that entire stack. That's a complex piece of kit that needs to be developed and delivered to the market, and the general dynamics in the region are very positive to be able to deliver into that type of a problem set.
When we talk about the region, we have to talk about Abu Dhabi. We are gathered here in the Abu Dhabi Finance Week. Mazen, what kind of ecosystem Abu Dhabi is trying to create when it comes to wealth management?
Look, I really think, obviously I've been part of this region for a long time now. It's my almost 20th year in Abu Dhabi. And you could kind of see a little bit, this place has always had the ingredients, but I think lately it's kind of shaping a recipe, if you'd like, altogether. And we talked about stability. And I think this is ingredient number one in that recipe. And it's
probably the most important.
Most important. And it's holistic stability. It's not just, it's not just the currency. It's not just, the rule of law. It's not even kind of the positioning of the place and its place in the world and how respected it is. So one is there is, an anchor around stability. Two, regulations, and we're in a place that always wants to be ahead in terms of regulations, be it even new assets, crypto and others, and is not afraid to explore, experiment. Third, talent. This has become a place that actually attracts and nurture talents. We're surrounded by campuses from top universities as well. And fourth, I think, it's a captive market to begin with. You have more than $1 trillion in sovereign assets. You have more than $1 trillion in family offices around the region here, and many of them here in Abu Dhabi. You have trillions of dollars, as Hani was saying, that are generated from the region. Some are offshore, but there's no reason why this cannot be kind of a global center. So I think that's kind of probably where
our time is running up. So let me ask you just two final, very quick questions. Hani, what do you think are the differentiators which will decide the winners from the losers in wealth management going forward?
I think we mentioned a few of them to give you some time back. I do think that people who think openly with an open architecture mindset can access world-leading product sets, know how to marry global portfolios with local portfolios, know how to bring private market access together with public market excellence, are going to win. And then you need the technology layer that supports that entire stack through good investor portals, advisor portals, OMSs, and custody clearing, all the things that a wealth manager doesn't want to have to do themselves, but they've got great supporters that are going to give them that capability.
Roger, my final question, which is, I think, very important, is that you launched last week your fintech, Alfea, established here in ADGM. Let us finish by you telling us how this came together.
Sure. Thank you for the question. So it's really two global leaders that are highly complementary, embracing the same thesis. And it's a four-pronged thesis. Wealth is growing in the region. Wealth should be managed in the region. There's a real lack of technology infrastructure to support players here succeed in their incredible ambitions. And Abu Dhabi is the ideal place to launch this platform from. And so on the one hand, you have BNY Mellon, wealth tech leader in the US. On the other hand, you have Lunette, ruthless capital allocator with deep connectivity into the financial ecosystem in the region. When you have two such players with a common thesis, the conversation went pretty fast. And maybe, let me just conclude this conversation by thanking you, Nadine, for moderating. And thanking you all for being here. We're going to just maybe show you something we're very proud of, a launch video of our company that we announced last week. And again, Mazen, Hani, thank you for being with me here on stage.
Thank you.
Thank you. We wish you the best of luck, and thank you for bearing with us, and let's watch the video together. Thank you, gentlemen, for your time with us, and thank you for bearing with us a glimpse into the future of wealth management. Thank you.
Very much.
Thank you.
Thank you.